Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. Best of the season, Rick?
Same to you, Jim. Thanks for inviting me on.
Deflation, is that going to rear its head after so many people have said they're worried about inflation?
Well, it's my favorite subject, really, and I'm starting to write about it again because I'm seeing certain things in the market that just kind of refresh my memory. I started writing on deflation back in the early 1990s, and I guess I was on the lunatic fringe then. I did occasional deflation pieces for the San Fran Examiner, and I wrote for Barron's on that subject. But for a period of years there, mainly in the 1990s, I was the only one using the word deflation in print in a major English language publication. But when the Thai baht collapsed in 1997, at least brought home the risk that deflation was possible. And you have to look at it as the settlement of all debts. You know, we say, oh, well, we're never going to pay off those student loans, and we're never going to pay this off or that off, and Social Security go bankrupt. And with the loans, you think, who loses? It's kind of a wink-wink thing, and oh, the students are just going to slip off the hook. But the fact is, the bondholders will pay, and it brings to mind something C.V. Myers wrote years ago. He had a book out called The Coming Deflation with I think it was a 1977 copyright. He had probably the earliest call on deflation. But the idea was that in the end, every penny of every debt must be paid, if not by the borrower, then by the lender. So, of course, when we put the keys in the mailbox and walk away from our underwater home, it's not as though the debt itself has been canceled. It will simply be eaten, absorbed by the mortgage lender. So to sort of bring things up to date, I'm watching the market rally, and every time stocks turn exuberant, oil is right there with it. The price of crude oil had its biggest one-day gain in 4 years yesterday. And I don't think the two of them I don't think it's coincidental. Because when we came out of the great housing financial crash of 2007 and 8, the leverage artists looked around and thought, well, what can we hawk up to the ears? And of course, housing was not the answer back then, because housing had come through this horrendous collapse. So they thought, what can we hawk 10 times over? And the answer was energy resources. So a lot of borrowing that took place, and I don't mean simply borrowing to buy things. I mean borrowing to expand the big enchilada, the derivatives market, which aggregates to something like $1 quadrillion plus. A lot of those zeros pertain to energy patch collateral. So when we had oil sliding, crude has taken a horrific slide this year, and over the course of this year, we've had crude come down from a high of about
about 72.
The high by NYMEX contract was 76 and change back in October of 2018. So we've had just over the last few months an amazing slide from 76 all the way down to a recent low of 42. And the collapse in oil prices was so bad that even the newspapers, the pundits and the mainstream lackeys and hacks, even they started catching on to the fact that it was not a good thing that oil was getting so cheap. And of course, even if we're all celebrating at the pump that you can buy premium gas now here where I live for well under $3 a gallon, at the global level, in terms of all this leveraging that's been done on energy resources, it's not a good thing. It is in fact deflationary. So I'm going to suggest that everyone kind of keep an eye on crude and watch how it moves, if not in lockstep, more or less in harmony. Crude and stocks, I think, are going to move together, because I think they're linked at the neck. And as much as the Fed keeps talking about tightening, they practically tighten the world right to the brink of a deflationary collapse, because that's what it is. Just one little turn of the screw, and you subject that $quadrillion of borrowing that has effectively taken place in the derivatives market to that turn of the screw, 25 or 50 basis points too much, and it implodes.
Of course, they're saying they're making their hikes based on data, but by doing that, they're going to be 6-8 months behind the actual progress of the economy.
Yeah, and they act like they know what they're doing, But the fact is, we've never been here before. We've never come off a huge stock market boom, a financials boom, or let's say an asset boom that's occurred in real estate and stocks, to some extent bonds. We've never been through that really over a period of 9 years to get so pumped up that the Fed knows exactly what's going to happen if they tighten and keep on tightening. So by almost everyone's reckoning, not just Donald Trump, but even the Wall Street Journal got its 2 cents worth in there and said, hey, like, whoa, Mr. Powell, are you sure you know what you're doing?
We'll have more with Rick Ackerman right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're speaking with Rick Ackerman. Rick, if they're going to be pointing fingers at people, is it the rising rates from the Fed or the tariffs that are causing the problems?
Well, it's kind of a double whammy. Trump, I would have believed 3-4 months ago that he was going to negotiate a deal with the Chinese, but they are definitely hanging tough. And so that every penny of that tariffs winds up being, a tax on what we import from China. And I think I remember when we talked last time, I was surprised to learn that the tariffs on steel and aluminum against Canada were still there.
And they still are.
Yeah, and that's amazing. And it winds up being an additional cost on U.S. consumers, manufacturers, wholesalers. And it's not inflationary really, because it's we can only inflate so much against a wage base that's barely rising. So but it represents an enormous tax, and when you layer that on top of interest rates that have gone high enough to actually kill the housing market, existing home sales have been down for like 8 months, and do the same thing to the auto sector. Well, I think you could go from boom conditions to bust pretty quickly.
Do you think governments understand just how much of a country's wealth is wrapped up in real estate, and when you're bringing down real estate prices, you really aren't making homes more affordable because people are losing jobs as that happens? Well,
if they realize it, it's in the wrong way. I used to I think it's maybe exaggerating to say that Alan Greenspan's an imbecile, but for someone with a PhD in economics, he made a couple mistakes that a high school or Eco 101 student would not make. One, he referred to inflated home prices as wealth, and number two, he talked about a capital investment boom in the U.S. at a time when household savings growth was negative. And both of those things are, they're very basic points that are made in Eco 101. And we do have this idea that the inflated value of our homes is part of our wealth. It's part of what we're going to retire on and this and that. But we should have learned otherwise. We should have learned our lesson in the housing collapse of 2007 and 8, because what we called collateral and what everybody was borrowing on with cash out, refis, was cut in half. Or not in half, but we had about a 35% average decline in the value of real estate across the U.S. I think the other shoe's going to drop, and we're going to have ultimately 70% depreciation in real estate. But in the recent refi cycle that kind of that try to get a jump ahead of rising mortgage rates, the percentage of refis that were done with cash taken out of the deal. In other words, these weren't people, they were taking on debt essentially to consume, and it was a big number. So whether or not the government, as you asked, considered all these assets, the impact on assets of an increase in interest rates, borrowing rates, homeowners surely do, and they don't waste any time turning the inflated value of their homes into spendable cash.
And of course, there's the people in the grocery store lineup using their credit cards to buy basics. How dangerous does that turn out to be?
Yeah, I could never figure that. I'm in line for something or other at Target or Walgreens, and there's someone there putting a $1.37 charge on a charge card. And I understand that we're becoming a cashless society, but boy, if it's cashless down to the level of petty cash, either people are hurting or they really just hate to handle dirty money.
Or on the other hand, they could have a bonus program with their credit card company, so at the end of the month you get some money back.
Well, that's true, and I guess I'm just I'm as bad as everyone else there. It turns out when they do these scientific studies, they've learned that we treat bonus miles like airline miles and things like that with a higher value than cash. So I'm the same way. I'm obsessive about putting all my charges, dinner charges on cards that give me more points for more points for dining out than I would ordinarily get. I get 1.5 points for each dollar spent, or 2 points. So I sort of live my life, my consumer life around point rewards like everybody else.
We'll have more with Rick Ackerman right after the break.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, do you expect to see much movement in precious metals if this deflationary turn in the stock market continues?
Well, depending on what words you use in your Google search, you can find 1,000 pages, articles, that support the idea that gold has done better in deflationary times than in inflationary, and you can find just the opposite. Almost like looking up the question of whether the Smoot-Hawley tariff triggered the Great Depression. There's, either way, you get great arguments. So, I don't know. Pardon me, I got off the track of the subject, but just to ask the question again, if you will.
Well, no, I was just asking, how's gold going to do in this kind of market situation? Well,
it's doing pretty well. We've seen so many false rallies in gold. We've had a bear market essentially since 2011 when the price of an ounce topped just above $1,900 an ounce. And every rally has been kind of a tease. We've had things that almost look like the beginning of a bull market. And this one does too. We have had a nice rally. I do mostly, my forecasts are all, technical, and I had a 1281 target for the COMEX February gold contract, and it got there, it topped yesterday within $1 of that price. It topped a little bit above it, and typically when these trading vehicles go above the target, it means it's going to take another leg up. And in the case of gold, we've been rallying in gold since mid-August. The price of an ounce was down around $11.73. So we've had a rally of a little more than $100. That's not really spectacular, but it's pretty good. It's definitely encouraging. And with gold having hit this target at 1281.20 that took 4 months to reach, we should expect it to relax, to take a break for at least, I'm thinking maybe 3 to 7 days. But what's happened is we pulled back a little last night, and already today gold is chomping on the bit, looking to blow through 1281.20. So I think this is the first really encouraging sign I've seen in gold in a while. And I don't try to explain the rally. It's a little bit befuddling. You could say that it is maybe looking ahead to some geopolitical crisis. I think we're right on the brink of war in the Middle East for one, and that could actually be a factor in crude strength. But there's so many factors that could impact gold, and it's been a long, long time since we've seen gold respond to anything geopolitical. Gold supposedly is a fear indicator, and we just haven't had much fear in the markets over a very long period. So there's so many things I can think of that could be pushing gold that I'm going to tend to ignore them and just look at the charts, and the charts look pretty good.
Now, of course, here in North America, we don't rely on oil from the Middle East anymore, but everybody else in the world does. And of course, we would be exporting oil at higher prices. We always think in North America we're kind of protected by those two oceans, but are we really?
Well, we're in a very unusual position of being, we're the largest oil producing nation on earth now, the U.S. We've surpassed Saudi Arabia, and that's kind of amazing, but it all goes back to the additional supplies that have come on stream from fracking, horizontal drilling, and it's a remarkable trend. It certainly worked to the detriment of crude prices, which we talked about earlier. But we're kind of enjoying it at the pump. But as I said, it's a big deal with respect to many loans that have been made on the energy patch.
Rick, I know you don't have a crystal ball, but do you think we're going to continue to see these amazing jumps and dumps on the stock markets?
Well, it's traced out these wild oscillations, and if you were to just look at the physics of it, we've had wild swings, and it takes a while for those swings to slowly calm down so that we reach a point of stasis. And you don't really have to be a stock market guy or a chartist to understand that. You know, when the stock market swings violently one way, it tends to overcorrect the other way. And with each swing up and down, the oscillations become, let's say, we become more comfortable with these huge swings, and they slowly turn mellow. We're definitely not there yet, with the market having had the biggest rally, the Dow, biggest rally in points ever, 1,000 plus. So there's still enormous volatility in the markets, and it's going to take. You can't really say. It could take 3 months, 6 months, a year and a half for everything to kind of chill out.
Rick, thank you so much for chatting with us.
Oh, you're welcome, Jim. It's always a pleasure.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for Rick or any of our other guests can be sent to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.